There's been much talk in the markets about how the FTSE 100 has benefited from the recent drop in sterling, which has really come about as a result of the EU referendum, the decision by the people of the UK to force through a Brexit, ultimately when Article 50 is enacted. Setting politics aside and the recent developments there, we've still got a very low sterling compared to other currencies around the world. Dr. David Paul joins us now from VectorVest with some further analysis. You've been a technical analyst for much of your working career, and it's interesting looking first of all at sterling, because we've seen this big drop. And of course the question is to you, is what sort of technical analysis are you placing on some of these charts to give an indicator as to where it's going?
Okay, Jeremy, well, I start with a monthly view of the pound against the dollar that I've been looking at for a very, very long time. If you remember, prior to the global financial crisis, the pound against the dollar, or cable, moved up above 2. It then fell and then went sideways on that monthly chart. Now, as a Elliott analyst, I've actually called the first move down wave 1, a little rally, wave 2, and then we had the wave 3 down, which it fell through the floor, if you can remember. I remember watching a cable one Friday afternoon. Yeah. I shorted it, I took 100 points, and then it proceeded to fall 1,000 points more on a Friday afternoon. I shall never forget it. We then went into the lows, and we then rallied, and we went sideways for many, many years. Now, I count that as a wave 4. If you look within the wave 4, there's actually 5 waves in the wave 4, and for those people that have been poor unfortunate people that have been reading my stuff for a long time, I was predicting that wave 5. I didn't know what was actually going to cause it. Now, the market got down, and it actually went to a 1.27 extension. 1.27 is the square root of the golden section, 1.618, and that was at 125. So my first target was 125, and that 125 was exceeded in some style after Theresa May's speech at the Conservative Party conference on a hard Brexit. And you will have noted that in technical analysis, support invariably becomes resistance. So it broke the 125, and last week we rallied back to the 125 level. And if we fall from here,
let's just change this onto a daily, so we can get more of an accurate description about what's been happening here.
If we fall from here, then the next target on the monthly chart is in fact 112, and it is my view that the pound against the dollar will sooner or later bottom out at around 112.
Now that is we've got that here through this Fibonacci here, haven't we? You've taken from the high point here, I think, is that right?
Yeah, I've extended wave 4 to predict the target from wave 5. It's a technique called a Fibonacci extension. First target was 127 of that, which was 125. The next target was 1.618 of the wave 4 retracement, which is 1112, give or take a tick.
So 1112 is your target?
1112 was the target. I think when it gets down there, it'll sit there for quite a long time and bounce down there for quite a long time, but I don't see it going any lower than that and I speak probabilistically.
Right, right. Okay, let's just go back to the daily chart on sterling, because you've drawn 2 dotted lines on this chart, and they're in opposite directions. Explain what's going on here.
Okay, Jeremy, this is a technique that technicians refer to as reverse divergence. On the price is making a falling top, and that rally last week up till about 125, where previous support has now become resistance. The price is making a falling top, but if you look at Wiles Welder's RSI down below, you'll see that the RSI in fact is making a rising top. Now that divergence is a potent signal which invariably means that the trend is going to continue. Some people call it hidden divergence. I've always called it reverse divergence. It was actually designed not by Wiles Welder, who put together the RSI himself, but by another analyst called Andrew Cardwell. And it invariably means an explosive move in the direction of the trend. Now, your moving averages show the trend quite clearly on that daily chart. The trend is down, and this is a rally. Last week, I believe, was a rally against that trend, and that trend is just about to restart on the downside. And clearly, it's got to get through the lows, but from here, I think that we're heading lower in the pound against the dollar. And as we spoke about in a moment, on the monthly chart, my target is 1.112. I don't think it'll fall to 1.112 from here. It's actually going to, in fact, make a series of falling tops on the daily chart down towards that level. And clearly, that's going to be very good for many of the big London listed miners.
Well, let's bring that part of the argument into the picture now, because as I said at the top, that we've had this boost for the FTSE 100, and it has really been a tremendous lift because these outward facing companies benefit a lot from lower sterling, and of course this is a policy that a lot of central bankers have wanted to bring about in their own individual currencies. So here we are with sterling now low. If you're predicting even more declines, the reasons for that are, if we believe the likes of Crispin Odey, we're going to go into recession. For how long? If sterling does continue to drop, indeed that will bring about higher inflation. It could well cause all sorts of problems. Now that doesn't sound to me like a good reason to get into stocks, but you think otherwise?
Well, I think that at the moment the FTSE 100 is very, very oversold. It would take an event to make it to fall from here. And that event could certainly happen tomorrow with the election, but assuming that doesn't happen, then I think that the market should rally. It's well up this morning. It should rally from here. And if sterling were to fall further, then certainly there is scope for a run on the FTSE to new highs.
Oh, that would take it past this heavy black line at the top then, in that case. That would be the...
It would take it up to there.
So what sort of stocks are we looking at then potentially to drive this?
Well, I think the first place would be to look at stocks that in fact get a big percentage of their sales in dollars, and the first place to look there would be the large mining companies. The large mining companies are looking good. As you know, Anglo's through the roof this year, and last week copper had a really cracking week, so it looks to me as if this commodity bear market, the longest commodity bear market in recorded history from 2011 to probably about now, it looks to me as if that's over and that we're moving up, and so I'm very strongly overweight in commodity shares.
David, we've got to leave it there, but thanks indeed for joining us. Interesting analysis, looking potentially for new highs for the FTSE 100 after that drop in sterling. That's David Paul from VectorVest.